How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was collected on October 6, 2020. Here we have a look at gold, and so we're going to examine what the institutions have been doing with their positions and take a look at what's happening on the charts. So what we can see here in terms of the positions is that from September 29 to October 6, they increased their longs from 316 to 320,000. That came as price was rallying up. Okay, so that makes complete sense as to why we're seeing the rally up. And then you take a look at the long percentage, and obviously it went up 1 point from 81 to 82%. And you take a look at net positions, that has also gone up from 243,000 to 248,000. So remember something. Longs all-time highs are 408,000. We are very far away from 408,000, okay? Another 90,000 or something positions can be added. So there's definitely a lot more room for price to continue higher, okay? So we're watching that. I think there's a decent chance that we see price start to build momentum and start rallying up here. The data, the positions, everything's in line with something like that taking place. All right, now we look at oil. Oil longs increased 248 to 250, 648 to 657,000. Shorts remained the same. That came as price was dropping. So as price was dropping, they were adding a little bit to their long positions. Okay, just a little bit. Long exposure still at 78, and we see an increase in net positions from 461 to 471. Now remember what we've been talking about. We had the initial drop from supply, but in the school we've always been talking about how this drop is going to be short-lived, and we're likely going to see a bigger push to the upside. So the data is supporting that. Okay, the data is starting to support that, and price action is supporting that. So we are expecting more upside, and so we'll be watching to see if that is indeed what will play out. Next we have the dollar. Price began a drop from an area of supply. As that took place, they increased longs from 14 to 18,000. They also increased shorts, but obviously the bigger push up was in longs. That caused long exposure to increase from 42 to 46%. Now remember, if we take a look at the coloration of the cells here, yes, they are somewhat red, but they're becoming, a little bit blue here. Okay, just a little bit. All right, meaning less bearish. Less bearish. Okay. Another thing I want to point out is you look at net positions. Look how aggressive they were here. Okay. Look at what's happening here. Not as much. Okay. Does that mean that we're going to see a bigger push higher from this area? It's possible. It's possible. But we're also seeing a lot of things on the charts that are suggesting that this move might continue lower. Okay. And I've detailed that in the forum within the school. But in terms of positions, you can see that shorts are a little bit more aggressive than they were, but this big increase in longs, that is the tricky thing. Okay, it might be nothing. It might be to help stabilize price at highs while they add to their shorts. I don't think so. It's a possibility, but I wouldn't put too much weight on that. So we'll continue to watch as price progresses through the charts this week. Aussie, big increase in longs. Okay, that came as price was rallying up strong, so we'd expect that. But they also increased shorts from 44 to 50,000. So what does that do for net positions? Well, that increases net positions to a more positive or to a more bullish. We look at the coloration of the cells here. They were somewhat with a tinge of bearishness, but they've become more neutral. So the coloration of the cells, the sentiment is telling us they are neutral. Okay, even though longs are greater in size than the shorts, the coloration here is telling us that they are neutral, and it's a good thing. I mean, we are stuck between supply and demand. Ideally, we'd want one of those to be removed before we know what direction price will go in, especially when the sentiment is neutral. Okay. Now we go to the US CAD. What do we see here? We see that they closed off some longs and they closed off some shorts. Bottom line, neutral, and a little bit bullish here in terms of net positions. And that came as price was right at the beginning stage of dropping from supply. So in terms of the positions of the institutions, they're not very clear as to what's going to happen. And that is, something that we got to be very aware of, because, I've talked about how I'm very interested in taking short positions from this area for a projected move lower. But this is what really holds me back. That and a few other things that we're seeing on the charts, which I've detailed in the forum at the school. But I do want you to look at this and see this as a potential problem. Okay, so we'll watch to see how this unfolds and make more sense of what's going on here. But the bottom line is they're neutral at this point, which means price can do that if it wants to. Okay, so we'll keep an eye on that one. US Swiss franc price starts to drop before hitting supply. They close off longs from 6,000 to 3, but they also close off shorts right at that drop. Okay, sentiment is bearish, which is good, 82%, which is a good number, and net positions are also bearish. They're becoming a little bit less so since these highs here. Okay, dropped, came back up, and now dropping again. So we'll wait and see what that means. We were expecting a bigger move to the upside, so that still could take place. So we will be watching for the evidence to build in either direction. The euro, closure of long position, the addition of short positions as price rallied up here. Okay, closing longs as price rallied. So what does that mean? Well, remember how I've been pointing out to you that they reached all-time highs here, and that would fuel profit taking, right? So we saw the profit taking. Now we are reacting from an area of demand, and they are still profit taking. So that leads me to suspect that there's a very good chance we see this over time. Okay? And there are things that we're seeing on the charts that would lend to the fact that this is the next move. Okay? So we'll continue to monitor that and see how it plays out. Next we have the pound US dollar, and we see an increase from 39 to 40,000 in longs. Shorts stay the same. Look at the coloration. Neutral. Meaning not a good time to trade it. Okay? You look here, and what do we see? Bearish. Okay? They used to be bullish. Prior to that, bearish. So this is not consistent with what we'd like to see. If price was going to start a major rally, we'd like to see them hold the bullishness and start to accumulate more long positions and build up the bullish sentiment, but that's not happening. So got to keep our eyes on that, because that could prevent us from getting into a long position here. If there's more highs, it could be very much capped at areas like this before it drops back down again, especially with data looking like this. Okay, so we'll continue to monitor this one for the trade signal. US dollar Japanese yen, we see a slight increase in longs from 22 to 24, and then a decrease in shorts. Again, nothing really strong here. Yes, there is a bearish sentiment, but with massive demand zones like this, it's not good to short at this time. So we're waiting for the chart to clear up. It'll take some time for that to happen. Kiwi dollar, closure of longs, closure of shorts, not much going on here, but the net effect is net positions increase in bullishness. But take a look at the sentiment, neutral. It's almost very similar to some of the other pairs that we've seen that are neutral. After making a high, pausing, we don't know if it's going to continue or if it's going to drop. So with a neutral sentiment, it's best to just sit on the sidelines and wait for things to clear up. Alright, so that's your CFTC report for the day that was recorded, October 6, 2020. If you have any questions, you can reach us at www.whiteoakfx.com. Thanks. Enjoy the rest of your weekend. Happy Thanksgiving. We'll talk to you soon. Bye-bye.